Hello everybody, I'm Gary Massa with Massa & Associates here at Pacific Sotheby's International Realty, and I'm here with my main man, Mortgage Mike Campos from San Diego Funding. And again, we wanted just to take a couple of minutes to go over some real life examples to answer some of the biggest questions that we're receiving right now. So without further ado, let's jump right into it. All right?
Sounds good.
So Mike, to catch us up on what we're talking about here, interest rates have been changing over this year. You want to give us an idea what's been happening over the last 5 months since January?
Since January 1st, mortgage interest rates on average have increased about 0.5%. From there, we've had some ups and downs. Right now we're in a little bit of a low, and probably by next week we'll have a little bit of an upswing. So rates have gone up from the traditional 4.0 to 4.1. We've hit 4.7, 4.8 on 30-year fixed loans. This past week, we've kind of trickled down to roughly around 4.5 range, and we're starting to see it creep back up again a little bit.
Right, and so we are really expected to see rates increase about 0.5% all year,
yeah.
And we're seeing that like in the first quarter, first half,
right.
Essentially. Which
yeah,
is,
it's a really big shocker, but the overall U.S. economy is doing really well right now, and so that's one of the main reasons why.
Right, absolutely. So with the boots on the ground, Mike, I know that you are working with a lot of clients right now, a lot of home buyers. Now, how has this affected their situations? I mean, what, on a common basis, how are you seeing this affect buyers?
Well, buyers have to be aware that as they're looking at properties and they're pre-approved at, let's just say 4.5, if the rates go up, that does impact their monthly payment and impact their qualifications. And in some cases, that may mean that they have to start looking at less expensive properties because of that. I made this little chart here.
Yeah, no, I mean, this is perfect. So, I mean, this goes into so we got a couple of questions, some from you, some from my clients, some from your clients.
Yeah.
Now, the question was, Mike, if rates go up, won't prices have to come down? So shouldn't I wait until, prices may come down?
Right. So if you're a home owner and you're thinking about selling your house, if rates go up, your buyer pool basically shrinks. The amount of people that are going to be interested in your property is going to get a little bit smaller.
Well, because they may only afford a little bit less.
Right. That's correct. Okay. So in this particular example, what I provided was that at $800,000 loan, your principal and interest payment on a fixed mortgage is about $4,000.
And that's at a 4.5% rate, which is what about we're seeing right now on a 30-year fixed, right?
That's correct.
Okay.
So if mortgage rates went up, let's just say, for example, 5%, okay, in order to keep the same payment, a home buyer would have to borrow 5% less money, or $760,000. So that's either going to be $40,000 larger down payment for that buyer, or it's going to be a lot lower of a sales price in order to maintain that monthly payment.
Right.
So if you're a seller and you're trying to sell your property at a particular price point, as rates are low, that's when you're going to have the most amount of ability to sell at that higher price point.
That's right. So, and again, like when buyers say, should I wait to get it at a lower price versus a higher interest rate, or should I wait till next year, or whatever the case? It looks like what we were talking about was over the life of the loan that these you're going to pay more in interest with a higher interest rate over the life of the loan, as opposed to paying slightly more in price versus having a higher interest rate and lower price.
Yeah, absolutely. It's crazy that the math speaks for itself. So at $800,000 loan amount at a 4.5 interest rate, if you were to make a payment on this loan for the life of it, usually 30 years, and you made a traditional principal and interest payment, you'll pay $659,000 and change in interest over the life of the loan. At borrowing less money at a higher interest rate, you're going to be paying more in interest over that life of the loan. In this particular case, $49,000.
Right, which could be a new car.
That's right these days.
Okay, cool. So, the other question, and maybe, I can speak a little bit about that as well, but a lot of homeowners or sellers right now are saying, well, our offers seem to be coming in a little bit lower than list price. We're not seeing as many happening. Maybe should we wait a couple months to figure out whether we should make any adjustments or what's going on right now? And, the answer to that is this really, again, buyers may have may behoove them to act now to be able to even pay a little bit more, take a lower interest rate. But again, we're facing a possible another rate increase here in the middle of June, right? Like the articles I read said there's a 96% chance that it goes up again, so we may experience the same thing we saw in March. But at the same time, if this is causing potentially, prices to have to start coming down to create that equilibrium of what buyers' expectations were, their affordability, prices may have to come down a little bit. So it may be best to get in front of that, you know what I mean, with, pricing your home attractively enough to where a buyer would take action right now, and we can get your home sold prior to any other changes that we don't know what's going to happen, right?
Absolutely. So July timeframe, the Fed chair is basically anticipating a 0.25% rate increase once again, which will have an impact on mortgage rates overall. It's not a direct impact, but it will have an impact.
Yeah, over time it will. Now again, is our market slowing? Well, of course, that's exactly why the Federal Reserve is raising the rates, because our economy is really good. Wages are up, all the different indicators are up and strong. As I just released in the monthly market update, our housing market here in North County, San Diego is high. We're at peak levels. $730,000 for a median priced home. That's the best we've seen in over 6 years. So again, that's why these things are happening. So again, I guess, Mike, if you could give buyers one piece of advice right now, what would that be?
My suggestion is that if you're considering home ownership, if you're considering moving from one house to the next, I would recommend that you get pre-approved now, understand your options now, and that way you can have a good handle on what you can do and your purchasing power is today. Then from there we can analyze what it might look like in the future, so you can figure out what's best for you and your family.
Yeah, I completely agree with that. You can pretty much forecast and tell them what that may or may not be based on expectations, assumptions and things going forward. Again, none of us have a crystal ball. We don't know what that's going to be, but we can always try, to analyze that. So Mike, again, thanks for joining me today. I hope you guys got some value out of that conversation. Again, if you have any questions whatsoever, message Mike, message me, call us directly. We're here to help. Thanks again and have a great day. Mike, see you soon.
All right.
Bye-bye.